Right, we're back. We've got two cow-oriented guests in today. So we've got Ribeye and Wagyu from the StakeHut team. Gents, welcome. How are you both doing?
GM, thanks for having us. Yeah, going good here. Wagyu, how we going?
Yeah, good. PM, going good, feeling real good.
Loves it, love it. So what I like to do usually is, before we kind of get into the product, just have a little bit of background on both of you guys, and obviously as much as you want to go into or as little as you want to go into, but more focused on how this kind of journey into the position you guys are in now, and maybe give us a brief kind of look at what day to day for each of your roles are. Maybe Wagyu, we can start with you.
Yeah, so for those that don't know me, I'm Wagyu, so one of the co-founders and lead developer for StakeHut. So we pretty much started the journey for StakeHut. We're coming up to about our first birthday now. We started the journey, pretty much just about a year ago. I think our birthday is 5th of March. So it kind of all started like we sort of been, like I've sort of been playing around with some, some bots and stuff like that, doing a few bits and pieces here. And I'm a long-term Joe Permable, so I was like, oh yeah, and then I saw Joe's they released their new tokenomics. So that was their Rocket Joe, V Joe, and S Joe upgrades. And then I was like, oh, hey, there's like a super cool thing that we could do here, and sort of deliver a lot of value back to, we could create a community, deliver a heap of value back to the community. So we got started by boosting pretty much the farming rewards on top of Trader Joe. So we were actually fortunate enough, we launched through Rocket Joe protocol, and then we were built on top of VJoe, and then we've also got our SJoe auto compounder. So we ended up pretty much using all of the the Joe tokenomics at the time to their full potential. And then as sort of time went on, we sort of refined the product. We then looked into, we've got a couple of auto compounding vaults there, and then it's sort of, then we started looking a bit afar. We're like, hey, how can we really up the game here? And then it was about that time we started exploring a few other protocols, and then it was about that time that Trader Joe actually announced their plans for DEX V2, their concentrated liquidity DEX. So we pretty much started building on top of that right away. But yeah, that's pretty much how we're at that point there, and a quick intro.
Nice. Should we, Ribeye, do you want to kind of fill us in on what your kind of origin story to get to this point was, even like pre-product? Are you guys both from a technical background? Is it just more kind of, it was a hobby, you went full-time crypto? What did that look like?
Yeah, I'll quickly jump in here. So yeah, I'm Ribeye. I'm the other co-founder of StakeHut. Personally, for me, Web3 is just something that instantly became this sort of passion and really this space that I just wanted to be in. So I love all things finance, technology, and art. And Web3 to me was really this space that really combines all those things that I sort of love and sort of pushes it to the limits. So I just instantly fell in love with being able to create, and also this sort of build mentality that we see across Web3. So Wagyu's the lead developer, so he's got a ton of technicals behind him. And then where I come into things is like sort of bring the community focus to StakeHut. So I take care of a lot of our socials and sort of community side of things. So a big part of StakeHut for us is really building this community, like Wagyu was sort of mentioning earlier, and trying to create this fun sort of environment filled with a lot of art and memes and all that great stuff as well.
Yeah, I've got to say, you guys have nailed it on that front. You always gives me a laugh when I'm kind of scrolling through the timeline, or whenever I'm flicking through Twitter and stuff like that. You guys have absolutely nailed that. There's some great memes. Do you have like an internal graphics guy doing that kind of stuff, or are you doing it between you?
Yeah, that's mostly me. Yeah, had a busy week. Sort of the last couple of weeks, I was just pushing out a whole bunch of memes. So you've probably seen a whole bunch of them spammed around Twitter, and I just dropped them off into our Discord and let the community go crazy with them. I just have a lot of fun sort of drawing stuff out when I get the free time. Just glad you're
Yeah,
enjoying it.
yeah. It's hilarious when you've got a community and they'll do a lot of like the organic kind of legwork for you with regards to being in front of everyone. If you've got the good brand assets and the good memes to like go with any situation that's happening, I think you guys have completely nailed it.
And that was a sort of big focus for us as well, was really sort of trying to nail down that community and creating this sort of tight bunch and really focusing on that, that organic growth that you're talking about. That's really the key thing for us as well.
How do you? So I've had this conversation with a few people this week and the week before. I think marketing in this space it's very tricky. You definitely don't have the same tool set as you would for like I don't know, like a fintech app or even an e-commerce store or stuff like that. And obviously data is very kind of fragmented and you can't really have a data set that's based on a trusted demographic and things like that. And obviously crypto likes to preserve as much privacy and as much kind of transparency at the same time, if that even makes sense. But how do you guys kind of tap into that organic kind of community-led marketing thing? Because I think it's a lot of projects are realizing they can't just come up with a typical Web2 mentality and just slap the same old tool set on top of it, because it doesn't work. Like it really, really doesn't work. And I think we're still at the very, very early stages of people like really, really figuring out. And I don't know if you guys have like got any thoughts or insight or what you guys have kind of seen from a more marketing and organic growth perspective.
Yeah, I think it's sort of it's a good question. I think for me, sort of it's something that we've sort of grown and developed over time is basically just sort of trying out new things and seeing, how the community responds and just slowly sort of, building that up over time. Like I know for me, like since we started and to where we've come now, it's things of our tweets and our graphics have changed over time and trying to see what the community sort of enjoys. A sort of big thing for me and something that I've always believed in is trying to be as heavily engaged in the community as possible. Basically, like I'm saying, in all my free time, I'm drawing memes, I'm spending it in the Discord, hanging out with the community and just talking all things DeFi. I wish I had the golden ticket to marketing, but I think it's just sort of trying things out, experimenting, not being afraid to have a post sort of fail and just learning and sort of growing over time, I guess.
Yeah, it makes a lot of sense. It makes an awful lot of sense. So what for people who are listening or watching or whatever that are unaware of the product, what's the kind of the high level, and then we can kind of dig down into each kind of aspect of it. I don't know, Wagyu, if you want to give us like a high level or like an elevator pitch of what StakeHut is.
Yeah, so pretty much what we envisage StakeHut to be is we want it to be the liquidity layer of Web3. So essentially what we want to be able to create is like this layer of liquidity. So everyone can come in, they can deposit their liquidity with StakeHut. We can manage it automatically for you. We can optimize it and we can really optimize your rewards there and the yields. So I think you'll start to see this as we push forward on this strategy as well. So it's important to note that our foray on Trader Joe DEX V2 is pretty much only the beginning of what we're terming the liquidity layer. And it's probably just the start of a longer term ambition to become that liquidity layer of Web3. So you'll start to see that more over the coming months, that longer term plan unfold there. But pretty much that's where we want to end up, is one of the top liquidity managers across Web3. And you'll start to see that plan unfold over the next couple of months there. So we're pretty excited about the future around that.
I'll jump in there too if I can and sort of expand on that a bit more. So really at the highest level, and to really break it down, we're a DeFi platform that helps automate and optimize concentrated liquidity. So anyone that's used the concentrated liquidity AMM will sort of understand how much more complicated it has become than sort of the traditional AMM model. So basically what happens is users come in, select a price range to provide liquidity and what price range to basically make a market. And as the price of the token is trading within the range that they set, they begin to earn and accrue these swap reward fees for facilitating those trades and making that market. But then over time, as the price moves, the user no longer, makes a market as the price is no longer earning those rewards. So concentrated liquidity almost becomes this hybrid sort of on-chain concentrated liquidity, centralized limit order book. And really, depending on the user's goals, there's practically endless ways to structure and manage liquidity, and which is great, but it also creates this barrier of entry to liquidity providers. So where StakeHut comes in is we break down this barrier of entry and really help users sort of optimize and automate their liquidity. And when we say users, there's also a whole bunch of user types for StakeHut liquidity. So at the most basic level, and what people are most familiar with, is liquidity providers can come along to the platform, deposit their tokens into the strategy, and then we automate and optimize their concentrated liquidity positions on top of Trader Joe V2. But we also work with the best protocols across Web3 to provide liquidity services and really help them get the most out of their liquidity. So since we started rolling out maybe 2-3 months ago now, we've started working with some really great partners like Colony, Future, Unidex, and Buffer Finance. And what we do is we create and tailor-make liquidity strategies for these protocols. And the really big draw here is we offer a really capital-efficient source for liquidity across Web3. So basically, with only a relatively small amount of capital required, we can help these projects facilitate really deep liquid markets and really bring this deep liquidity to everyone's favorite tokens across Web3. So everyone might be sort of familiar with that old model of supplying liquidity, where these protocols will basically rent their liquidity from mercenary capital, and they end up sort of paying a huge amount in bribes or emissions to create that liquidity, which can be a hugely costly way of doing things. I was having a look the other day, and I think over $250 million worth of bribes has been spent by these liquidity seekers. And basically, through active liquidity management, we offer a much more efficient way for protocols to own and incentivize their liquidity. And this is the sort of big movement that we're sort of seeing in DeFi. And we're sort of starting to see that narrative shift now as, protocols move away from these inefficient sources of liquidity to unlock more sustainable and efficient solutions. So yeah, that's sort of where we come into things, is this active liquidity management layer.
Yeah, I love that. There's a few projects that we're quite close to that they're looking for additional ways to kind of circumvent that whole liquidity mining kind of death spiral that happens, and what we've kind of seen from like the first iterations of DeFi and excessive printing of emissions to attract that, as you said, mercenary capital. And it's where do you think a product like yourselves comes in with regards to, does it allow the project to be, or the liquidity of specific tokens to reduce the amount of emissions because they can offer higher APRs and APYs? So like there's less burden on the actual native underlying token. Is that an angle for it?
Yeah, sort of a couple of different points. So like a big point as well is not only that, but it's also a lot more capital efficient to provide liquidity through concentrated liquidity. So by supplying by supplying their liquidity, they can unlock much deeper liquidity for their token pair. So it's a lot more capital efficient for these protocols as well to now own their own liquidity through protocol owned liquidity. And then, like you're saying, it's through emissions as well. So with StakeHut, what also becomes possible is we allow these protocols to incentivize concentrated liquidity ranges in what we call concentrated liquidity farming, which is basically the next sort of step up from that traditional approach that we're talking about, where instead of paying huge emissions to incentivize, these inefficient AMM ranges on the old model, with concentrated liquidity, we can actually incentivize a very tight liquidity range where the trading's actually happening, which is a much more efficient way of doing things and can achieve, higher APRs and really help these protocols get the most out of their emissions and significantly reduce their emission rates.
Yeah, I suppose that must be super beneficial for any kind of emerging stablecoin, whether that be CDP or, dare I say it, algorithmic. But if they're looking for some kind of peg stability implementation with you guys, I know fine well that we hear a lot of emerging protocols that have stablecoins and stuff like that where they're just completely priced out of the whole curve game. Like it's just not a viable option for them. They can't afford to be going to spend X amount of emissions, as you were saying, like the 250 million. And you're kind of buying into the whole cartel game there as well. Everyone knows what's happening over there. So is that like personally from the outside looking in, that looks like a great kind of happy medium for you guys to be able to like provide that service to stablecoin providers.
Yeah, 100%. So yeah, with the stablecoins, you can supply or incentivize the liquidity at that peak price. So you create this market, pairing this new stablecoin with, USDT, USDC, whatever you like. And then you can incentivize that $1 price range to really maintain it and create deep liquidity around that peg point as well. So yeah, a lot of really exciting stuff becomes possible with that as well.
Nice. What I'm going to do is I'm just going to bring up the app because I think there's a few good points in there that I'd love to hear like straight from the source, if that makes any sense at all. So give me a second while I bring that up, and then we can kind of just talk through the app in and of itself. Can you see that?
Yep, gotcha.
All right. So for those listening on Spotify, I apologize, but we'll talk you through it. Anyone who's watching on YouTube might make a bit more sense. Right. So what are we looking at here with regards to more focused on this strategy tab? Like, is this quite a wide range on Trader Joe? Is what's kind of happening on the back end there?
Yeah. So these strategies here. So basically, we summarize these into balanced, concentrated, and sort of balance wide. And yeah, exactly right. So this describes sort of the bin ranges that we provide liquidity across. And this is all specific to that sort of to the pair as well, and tailor made to the pair. So, for example, during a very sort of sideways crab market, you'd expect the concentrated strategies to sort of perform really strongly when that liquidity is only, where the trading price is within that tight range. And then over more volatile markets and over sort of longer periods, that's where you go for those sort of balanced and more wide approaches as well, and expect them to outperform.
Yeah, that makes a lot of sense. So, how do you guys decide on the range? How do you guys? Is it more of a collaborative approach with specific projects? Is it kind of backtested data? Like, how does that all work on the back end?
Yeah, so a bit of both as well. Depends, if we're working with a protocol for the pair as well. But we've got a really cool backtesting bot that allows us to sort of backtest a whole bunch of strategies and try and work out what ranges would have performed best over different different time periods and different markets. And that allows us to sort of go, for these more volatile times, you'd expect this larger sort of range to perform better. And then during these more, sideways markets, we can narrow that down. You expect those tighter ranges to perform better.
Yeah, makes an awful lot of sense. So with the farms as well. So what is the user flow here for someone who'd be kind of approaching this for the first time? They've deposited their assets on your liquidity tab, and then they've came over to the farms tab, and what's kind of happening on top of this here?
Yeah, so diving into these tabs here. So this farms tab, this is for our V1 pools actually. So this was our first iteration of pools built on top of the TradeJo V1 decks, and these are our VJO boosted pools. So I think Wagyu has mentioned that earlier. This was our sort of first build where we accrue Joe tokens, we lock Joe tokens and accrue VJO, and that allows us to boost yield on top of those V1 pools. And then that liquidity that's on top of our TradeJo V2 pools. So if we jump into AVAX USDC balanced, sorry, it would have to be connected. But in this one here down the bottom, we also have what we call our liquidity farm. So that allows us to earn additional rewards.
Bear with me a second. I'll cut this bit out. Right. Yeah, so where are we at with this then? So we've got AVAX USDC on Avalanche, balanced, and it's dynamic.
Yeah, that's right. So this is our AVAX USDC TradeJo V2 pool. So this shows just how simple it is. So you can see on the right side there, users can select the amount of AVAX USDC to deposit. And then they approve both tokens, deposit, and a few simple clicks. Their liquidity is then automated and optimized on top of TradeJo V2 and always earning those swap rewards. And down the bottom, we see this StakeHut Boost tab. And this is our concentrated rewards farm. So what we allow here is users can then stake their liquidity tokens into this farm to start earning additional rewards. And so what this allows is with partnering protocols, we can also incentivize liquidity ranges for those users to then earn those additional rewards as well.
So with let's say there was a incentivized range specifically. Is there any indication on here of when you are earning those boost rewards and when you aren't, or is it a little bit more kind of widespread than that?
Yeah, so our whole range, so you can see on our bar graph there, this is the range that we provide liquidity over. And so by allowing users to farm our vault, we effectively allow a protocol to incentivize that liquidity range. And so anyone that deposits into our strategy is going to be providing liquidity over that range that was set. And then they can start farming those additional rewards as well.
Awesome. So just with similar to if I was going through TraderJo directly, I'm free to deposit any weighting of AVAX and any weighting of USDC. Is that correct? Or do you have to kind of go 50-50 on this strategy, or how does that kind of work?
Yeah, so that's where things get a bit different as well. So our liquidity vaults work using sort of this this ratio. So if you type in the amount of AVAX, it'll tell you how much USDC is needed to complete that pair. And this changes over time as well with the way that concentrated liquidity moves. So of course, with concentrated liquidity, it's no longer that 50-50 sort of ratio in the Uniswap V2 forks that you're used to. It now changes over time. So by maintaining these vault ratios, That's what allows us to constantly provide liquidity and keep liquidity active. Wagyu, do you want to jump in there and chat about that as well?
Yeah, so pretty much what we've got there. So one of the key points here is the liquidity allocation. So the main objective for StakeHut liquidity is to keep the liquidity always in that range, in a set range. So we handle the rebalancing in the back end through our partnership with Chainlink Keepers. Chainlink Automation now rather, and then pretty much we're handling all the complex rebalancing and all that logic behind the scenes. And then what you can do is one of the cool things that StakeHut liquidity facilitates is when you're on Trader Joe and you get a liquidity book, it's an ERC 1155, which it's pretty much like it's pretty much all these tokens, and it's really hard to be able to incentivize that sort of token. So what we do is we compress that into an ERC20, which is a single fungible token, which pretty much says, hey, if I've got one of these tokens and Ribeye's got one of these tokens, we can exchange one for one, and it's worth the same value. So that's pretty key to the StakeHut boost on the side there. So by having one of those tokens, you're eligible for the StakeHut boost there, which means one, you're getting bonus rewards on your yields, and then you're also like your liquidities. We're optimizing your liquidity in the background for you. So pretty cool stuff there, and what we're also excited for is like it'd be cool to see other partners. Like it enables a lot of other cool stuff, such as like collateralized lending on liquidity book tokens and stuff like that. So like if anyone is thinking of building something like that, we'd be pretty keen to have a chat.
Wow. So I suppose it allows you guys to both, if they were trying to incentivize liquidity, one side isn't completely footing the bill. If there was some kind of collaborative approach around that as well, like on this one, it says earning Joe and earning the stake token as well. So that's really interesting. With regards to rebalancing and strategy, if someone's kind of quite fresh to this, they might have tried it out directly on Trader Joe and things like that. What's the kind of is there a one size fits all approach if you're effectively going out of range? How do you guys kind of think about that, even just from a personal perspective and maybe on the stake perspective as well?
Yeah, I'll quickly jump in there. Wagyu can come in as well. There's definitely no sort of one size fits all approach when it comes to liquidity providing. Everyone's sort of got their own different liquidity strategies and goals as well. What we offer is sort of this quite simple approach to providing liquidity that allows users to automate and keep their liquidity active and always earning those swap reward fees. So the way that it works is like Wagyu was saying before, is we provide liquidity over this range, and then as the active price moves, we use Chainlink Automation to automatically trigger a rebalance, centering liquidity around that new active bid. And what that allows us to do is make sure that liquidity is always being active, always being used, and always earning those swap rewards. But yeah, when it comes to like sort of one size fits all, there's not really a one size fits all. It really depends on the individual's goal and what they want to achieve when providing liquidity. Like for example, some people can use concentrated liquidity, might want to use it to sort of DCA in and out of a token, and a lot of stuff like that becomes possible as well. And I think that's a good point to talk about. Another thing that we're working on as well is what becomes possible with StakeHut liquidity is creating this sort of strategy marketplace that we're working on as part of our roadmap as well. And what this allows us to do is bring in some of the, the big brains, the quants, and the developers across Web3 to create and manage their own liquidity strategies by using StakeHut's liquidity infrastructure. And then users can sort of have a look at all these different strategies created with all these unique goals and find something that they might be interested in and want to achieve for their own liquidity. And then our strategists will be able to earn performance fees by managing these strategies as well. So that's a little bit of insight of a bit on our roadmap as well, and what we're excited to build out. Wagyu, anything
Yeah,
else to add there?
No, you pretty much nailed it. Love it.
I seen one of you guys post about that, like the strategist marketplace, and then my ears really pricked up that. So that, I suppose, it kind of leans into more kind of social trading and things like that. If people kind of want to follow these kind of proficient kind of market makers in DeFi, then they could do on that place. How would that kind of look like? Would it be, obviously you said, a performance fee based on a specific outcome? Would there be rev share to StakeHut itself, or StakeHut holders or stakers and things like that? How is like the preliminary ideas around that looking like?
Yeah, that's 100% right. Wag, I'll let you dive into that and leak a bit of alpha from a dev perspective and how it's sort of looking.
Yeah, nice. Yeah, so on the strategy marketplace, what it creates is this really cool flywheel effect. So what you'd have in theory is, like, you've got all our StakeHut whitelisted strategies, our official strategies on the main page. But then what we're working on is like a third tab there, which is pretty much the strategy marketplace. And then what happens is we'll look to run each epoch. We'll have we'll do like a benchmarking of the strategist, and then of all of the strategies, it'll go through and be like, oh, hey, this guy, this person, that they perform really well. And so what we'll look to do is we'll then highlight the best performing strategies on our front page. So what that would enable is there's a flywheel effect there. If we're highlighting a strategy on the front page, there should be increased TVL into that strategy, which then would enable the strategist to take a higher percentage of, a higher fee out of that pool. And then there's also revenue share back to StakeHut and that strategist. So there's really good incentive there for a strategist to perform well and do well by the users in the vault. And then likewise, StakeHut benefits as well through the revenue share by providing the platform for strategists to be able to do all this. So at the end of the day, what you end up with is the best outcome for the user as well. So pretty much it's just driving like competitive infrastructure to be able to pretty much competitive market making, which is really cool, and we'd be providing the platform for that. So we're excited to bring that to market. So we're still working through that at the minute.
Nice, love that. We've seen a few more social kind of copy trading kind of platforms pop up, and I really like the idea of it. But I think this structure makes a lot more sense purely based on kind of liquidity in DeFi. Like a lot of the copy trading platforms, they might be on perps, or they might be on kind of just going into some yield interest bearing strategies and things like that. But this makes an awful lot of sense, particularly for the underlying tokens, for the user, and again for the whoever's actually coming up with the strategy. So that's really cool. Would they have to kind of go through some, like, create a brief around what the strategy is and what the kind of end goal is? Because as you say, there's no kind of one size fits all desired outcome for providing liquidity for a specific pair or for a specific duration. Is there any thought around how you kind of monitor and oversee the kind of the brief that people would be able to buy into, if that makes any sense?
Yeah, so to begin with, all of that would be for whitelisted users only. So strategists would have to be whitelisted. It wouldn't be completely permissionless. So to begin with, it would be a whitelist only. And then on the front page, you can see on some of our pools there, we've got underneath the token pair, you can see that there's a description of the strategy. So we'd look to publish in consultation with the strategist how that strategy is to perform. They're sort of like a quick thesis on why they've chosen that strategy. And then pretty much what like we'd pretty much just leave the performance prove itself, I suppose. So you'd leave it run for a little while. Like we wouldn't look to highlight any of the strategies to begin with until there was like proven performance. And then once there was proven performance, we could look to bring that onto the front page and really highlight that and help the strategists grow TVL for their vault, which would be pretty cool.
Yeah, that's so sick. So I've seen the Trader Joe guys have opened V2 for anyone to create any pool permissionlessly. How does your process look like for onboarding a specific asset pair? Is it kind of internal at the minute? Is it kind of community suggested? Is it kind of down to stake governance? Like how does that process look like? Because I can imagine there's going to be 1,000,001 assets on Avalanche and on Arbitrum now that are going to deploy into Liquidity book, and then they're going to obviously come knocking for you guys to see if there's a strategy you can kind of build around it.
Yeah, I'll quickly jump in there. So at the moment, we've sort of been rolling out StakeHut liquidity, targeting those key popular pairs first, and then slowly expanding from there, as well as working with these partners over time as well to help bring out and create their strategies. And that's a great segue into another project that we're currently building out as well, is we want to create and make StakeHut liquidity permissionless as well, and allow users to completely create their own vaults, and that will allow us to help scale out once we start seeing all these pools pop up, as well as users will be able to jump in and create their own private and public infrastructure. And that's something we're already seeing a ton of demand for as well. Is this creates a great way for DAOs and other platforms to jump in, create their own strategies completely permissionlessly, as well as incentivize that as well without even having to talk to us, as well as these more complex institutional sort of level liquidity providers that have their own really unique needs and structuring. They'll be able to create their own private vaults as well. So yeah, excited to roll that out, and that allows us to scale things massively and account for all those pools as they pop up over time as well.
Yeah, damn, that makes an awful lot of sense. That's really, really interesting. I love to see how you guys are scaling. That's really, really great. What about scaling the other way? And this might be kind of taboo, but what about other concentrated liquidity dexes, or is that kind of off the cards?
No, nothing sort of off the cards. I'll say we did a lot of sort of our research. Uniswap V3 was of course the leading concentrated liquidity dex and creating that scene. So on the very early days when we were first creating StakeHut liquidity, a lot of our research was done there, and around Uniswap V3 and concentrated liquidity and learning from there. So something we're sort of open to and sort of exploring and seeing where DeFi takes us. A big thing about StakeHut is making sure that we're always innovating and always following that fast pace of DeFi and keeping up and growing over time.
I'm just thinking this may be a bit out there. Is there any way a project could actually utilize your liquidity management to generate their token generation event? Like if you could set up a strategy for them to allow kind of an organic way for them to actually go to market with regards to, I don't know, setting a specific strategy around only having their token in there and only accepting USDC or ETH or whatever.
Yeah, 100%. This is something that we're exploring as well, actually. So that's a really good question. So like, with these concentrated liquidity dexes, you can provide liquidity however you like. So you can provide 100% your own token, 100% USDC, whatever it is, and build this sort of ratio however you like. So what that allows as well is when we first create these vaults, for a protocol, they might be it might be easier for them to, make a market by providing a large majority of their own token. If that's obviously where their treasury is their own token. And so they can, use a lot of their own token to create and facilitate these vaults. And over time, sort of allow that natural market making process to facilitate that, that market and shape that vault. So something that we're exploring is that, that ability to first, make that market for new pairs. Something that's definitely possible and something we're exploring as well. That's, very exciting.
I'm going to ask one more, could be stupid question, so bear with me. So we're seeing a lot of projects that are going from, instead of having single-sided staking, it seems like everyone's kind of cottoned on to the like pairing their asset, like how balanced it is. So like an 80-20 LP, and that's you effectively take that LP token, and that's just kind of staking token. With you guys actually having that being that conversion to ERC20, would that be possible as well? So let's say I've just created a new project. I don't want to offer single-sided staking. I want to try and incentivize people to actually kind of stake with you guys. Then I can take my LP token there, and that's like effectively my way to get rev share of the platform as well. Would that ERC20 kind of one for one allow projects to do that?
Yeah, I think so. Wagyu, I'll let you jump in there. I believe so. Wagyu.
Yeah, I mean, yeah, in theory we could. Yeah, we'd have to. Yeah, we could have like a fixed range, like a fixed ratio. So yeah, you could set up a strategy where you've got 80% of one token and it maintains, that 80-20 ratio of tokens. So yeah, that would be a possible strategy. Yeah.
All right, nice. So what other than the strategy marketplace, what is V2? Because as I say, every morning when I wake up and the first thing I do is grab my phone, and I know that's really bad, you shouldn't do that, and it's the last thing I do before I go to bed, which is also equally bad. I see a little cow or a little StakeHut meme, and there's some reference to V2, so I don't know who wanted to pick up on it. Obviously don't completely give the game away if you don't want to, but yeah, what can you tell us?
Oh, okay. Yep, I love it. Let's spill some alpha. So this is referring to what we call staking 2.0. So what staking is, and that's spelled SteaKing. So this allows users to stake their token, their governance token stake, to earn real yield rewards from the protocol. And up until now, that's only been distributing rewards from our V1 pools. So with this new platform that we're building out, this will allow us to flick the switch and start distributing rewards from across all StakeHuts, pools, vaults, and products, and this new infrastructure. So this is something that the community is very excited for, obviously. We haven't revealed too much yet, other than a couple of leaks and teasers so far. But it's going to be shipping quite soon, actually. And to sort of dive into what we want to accomplish here is creating this solid foundation for staking. So staking 2.0 is going to allow us to really scale further and make some really cool stuff possible. So for example, it can allow us to pay out rewards in multiple different token types. And it also allows us to build in further what we call staking applications or future utility for the stake token. So we're really excited for what this will allow us to achieve and build out, and really creates this solid foundation. So it's something we're really excited for. Wag, I'll let you jump in there. I know it's something that you're very eager for as well.
All I know is that every night I go to sleep and dream of turning this switch on, but every night I wake up and ribeye reminds me I'm not allowed to turn the switch on yet. So I'm sure the day is coming, and yeah, I've heard it's coming very soon. So I'm very excited for when it does.
Right. I won't push you guys too much more on that, but as I say, the memes are kind of speaking for themselves, and they're in my face every day, so you're used to doing something right. Is there anything else that I might have missed off being a bad interviewer? Is there anything else you want to kind of bring up or kind of get out there? What should people be looking for in the kind of short to near term? Might have covered it already, but maybe just like a quick recap would be great.
Yeah, awesome. So what we're working on, and a big part of StakeHut is we always like to be innovating and keeping up with the fast pace of DeFi. So anyone that knows StakeHut knows that we sort of do a lot of our building and work on projects in secret and keep a big part of our roadmap sort of unrevealed. And there's sort of a couple of reasons for this, and a big part um, is with our build process, we really want to innovate and push the boundaries of DeFi and make some really cool stuff possible. So we like the creative process of building and innovating where DeFi takes us. So, for example, if you asked us our longer term roadmap a year ago when we're first starting off, it'd be completely different to where we've grown to today. But what we've revealed so far is three big projects that we're currently working on and just around the corner. So the first is, of course, the strategy marketplace that's going to allow the best strategists across Web3 to come and create and manage their own liquidity strategies and earn performance fees. And then, of course, we'll be taking StakeHut liquidity permissionless, which will allow a lot of cool stuff, with these users to create their own vaults across any pool they like, and also allows any protocol to come along and to integrate concentrated liquidity very easy by allowing StakeHut as this middleware to do so. And then, of course, staking 2.0 just around the corner as well, which will allow us to turn on the switch for rewards from all StakeHut products. So, yeah, that's what's currently on the radar and what we're most excited about, I'd say.
Yeah, that's awesome. Yeah, I think you guys, it seems like you really got your finger on the pulse and coming up with like new and innovative and novel things. And I do think it's right that you kind of keep those cards close to your chest as much as you can, because particularly at this stage in the market, there are an awful lot of protocols that will be paying attention and just being like, well, that's a good idea. Maybe we can go and push that. So really excited to see what you guys do over the next couple of months and couple of years. It's been a pleasure to have you on. As I say, once everything's rolled out, just give me a shout. We can do it again. And yeah, if there's anything that you need from us in the meantime, just give us a shout. We're always happy to help. But once again, thank you very much. Really appreciate it.
Thanks very much for taking the time. Really appreciate you chatting to us and really excited to get this out to the community who knows you. Very excited to listen in and a big fan of the podcast.
Awesome. So just one final thing. When people filtering into Discord, if they want to come find out some more stuff about you guys. I'll take that as a yes. I'll drop the Discord and all the relevant links and stuff like that in the description below. So if anyone wants to find out a little bit more, you can just jump in there.
Sorry, I missed that last question.
Yeah, I was just saying, is Discord the best place, or have you got kind of Telegram set up, or where would you like people to?
Oh yeah, of course. So we're big on Discord and Twitter. That's where our community loves to hang out. Got a real close community on the Discord and always active in there.
All right, that's perfect. Right, gents, thanks again. And as I say, let's run it back towards the end of the year. And everyone listen, thanks very much, and we'll see you next time.